Good evening, traders. Today is Thursday, April 13th. We have a short squeeze today, boys and girls. It was a short squeeze, and we'll get into that. I'll show you the details of that, what happened today. But what I want to show you first is actually yesterday. I think I covered it yesterday, and I do remember mentioning it the night before CPI. This was CPI, the morning of CPI right here, that surge. The night before was a huge red candle. That was not yesterday night. It would have been Tuesday night, because Wednesday was CPI. We have another red candle tonight. I have referenced this in the past for you newer viewers. See that? Well, okay. So when the red candle comes, oh, I don't have the MACD clear this spot. That's okay. If it's a green candle, it's actually a good sign. If it's a red candle, in the past, that has been suggestive of a sell-off. Okay, so I'm just pointing this out for your information. You can do with that information as you will. Now, interesting to note something. Futures today, actually, not tonight yet. I'm going to show you tonight in a moment. This was CPI. Okay, this was CPI futures. This was in the afternoon today. That was a lower high. Interesting to note that. Lower high. You're going to see a tweet. Actually, SPY made a higher high relative to SPY's CPI pre-market high. Okay, so there's incongruency there. However, what I will say is, in the past, when I've seen futures take something first or not take something, usually SPY follows. Okay, so I've tweeted, oh boy, just 3 weeks ago now, something like that. When the futures first reclaimed, made a higher high than the March 6th high. Go back and look at March 6th if you want to know what I'm talking about. Futures took it back first. SPY took it back the next day. Okay, so what I'm showing you, the reason why I'm showing you this now is, okay, so this is futures. This is 4177.75 here. This is 4177 flat. Okay, intraday today, afternoon-ish. All right. Let me show you where futures are at as of like 5 minutes ago. Okay, the blue line right there, that is 4177.75. That is the CPI high. This was intraday today during the late afternoon, close to 3 p.m.-ish, right? See that? Didn't quite touch it because it was at 4177 flat. Okay? That's where futures is at right now. All right? You've got about an hour left. Where I'm going with all this is you have until midnight Eastern time. That's about an hour from now. Futures has an hour to make up this distance, to at least touch it, if not go above it, to be considered at the very least a double top. If you touch it exactly, that's a double top, which to me is actually bearish. When you have double tops exactly matching, that means you're not going higher. I've seen too many times where double top, triple top, quadruple top, boop, you're going lower. So you have about an hour left to go past, even if it's by a penny, 4177.76. Then you have made a higher high today before midnight than yesterday. That's what I'm trying to say. That's the punchline. Are you going to make a higher high than yesterday's CPI's high or not? It's a yes or no question. You've got an hour left. So, all eyes on futures. Let us see. Let's see what the MACD is going to do. This is the 5-minute chart that you're looking at. We will see. Okay. This is a 65-minute chart. What happened today, guys? I'm showing you this first because I'm going to show you why I did not. Oh, actually, I got calls, but I bailed out of it so fast I didn't really make any money out of it. Things were not you didn't have confirmation on the 65-minute MACD. You did not have confirmation on SPY. I'm talking about SPY. Let me show you why. At opening bell, I mean, you can't really see it. I'll just zoom in. Okay. At opening bell, right there, right at opening bell, when that candle, 65-minute candle closed, it always closes right at opening bell. The MACD equaled the signal line exactly, perfectly to the penny, to the decimal. Okay? And so that's that. Now, just because you have a positive cross does not mean it's a go. Because I'm going to show you an example where you're going to get stuffed at the zero line. Okay? So, this is what happened today. That's fine. But I'm going to show you another example where it didn't happen on that day and you would have gotten stuffed. Okay? So this was today. So you got that visual? Let me zoom out. This was today. Now, before I go to the next slide, obviously this is what happened last night. You guys, this was a total squeeze. Look at this. Sell, 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 lower, low, lower, low, lower, low, low, gap up, go. It was a squeeze, guys. This sucker was going lower into extended hours yesterday, and then we wake up in the morning, gap up and go. Okay? I don't know what to tell you. It's not up to me. Okay? It's not up to me. Now, okay, so you got this visual. Exactly equal to the signal line right here at opening bell. And you already have a positive cross as you're going up towards the zero line, right? Okay, so what I'm trying to say is just because you have a positive cross doesn't mean it's a go. And here's why I say that. Right there. Positive cross, you got stuffed. Okay? You can't just assume a positive cross is a go. See that? You would think so. You would, oh look, the MACD's curling up. MACD's curling up. Oh, it's got a positive cross right here. It's a go. It's a go. Like for like 2 hours. Like, see that? Here's a pivot point. Here's a pivot point. Here's a pivot point. For like 3 hours, just a go. Only to get stuffed. And you want to know what that stuff looks like? We call that pump and dump. That's why I didn't get calls. I was worried about that. Okay? You got to be careful how you interpret and how much risk you are willing to assume. It's really a question of risk. And it's a question of interpretation. How much risk are you willing to take? Because this is a 65-minute candle. 1, 2, 3 hours of movement. 3 hours of pumps. Only to get dumped. Okay? See what I mean? You would have thought, oh, I'm in the clear. I got positive cross. Dump. You have to be careful. You have to be careful. All right? So, that's what I want to show you. So, you got to be, so I I get a lot of questions. Oh, negative cross, positive cross. It's not that black and white. It's not just, oh, is it a positive cross? And it's then get calls, as you have just seen right here. That's not always prudent. You have to be judicious. Okay? So, all right. We're going to start off backwards again. Because I'm going to also show you there are other red flags. I'm like, nah, yeah, I'm not comfortable. You're going to see all kinds of bearish divergence references today because there was. And combine that with the example that I just showed you, you could have gotten stuffed right at the zero line. So I was like, you know what? I'm not taking that risk. I'm not taking that risk. Okay? So, all right. Actually, we're starting backwards. We're starting at the end again, 195 minutes. I'm going to give it to the market maker for cheating fate. What do I mean by that? But you can't cheat massive bearish divergence forever. What do I mean by that? This morning, the MACD was headed towards the zero line, but a short squeeze flattened it out and curled up. This is the 195-minute chart, guys. Look at this. Last night, down, 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 all up right before the zero line. I can't remember the last time I saw something like that. They knew it was going lower, but right at the zero line, because once you cross that zero line, guys, look out below. You're going lower. As you just saw earlier, this is the 195 minutes, so there's not as many, but you saw it last night. Lower, 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 lower. Oh, up. Here we go. Okay? So this was a squeeze operation. It's not up to me. Okay? I couldn't have told you last night that, oh, you know what, we're going to short squeeze tomorrow. All right? So, now, but you guys remember, what is my criteria of bearish divergence? As long as the MACD does not cross the zero line, bearish divergence is fair game between humps. What do we have? Lower highs, lower high, higher highs. Okay? This is the 195-minute chart, guys. This is going back, 2 weeks? Yeah, 2 weeks. So be careful. Be careful. You know, it's that's all I'm gonna say. Be careful. Okay. Oh yeah, I talked about this earlier. We need to keep an eye on this. This was a totally unnatural move. How do you go down, 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 gap up, go? A short squeeze can do it. Okay, that's the bottom line. Okay, here we go. Yesterday's pre-market CPI high was 413.75. It did take it. What was it? 413.80 something? It did take it. It was like this candle or this candle. It took 413.75. This is the CPI wick high yesterday. So it did take it today, all right? So, but as I'm watching futures, I actually have futures over my shoulder. I'm looking over it. Still hadn't taken it. It's still in that same spot. Still flat horizontal. But, you know, we still got an hour left. That's a lot of time, no problem. Okay, so just keep an eye on that, guys. If you guys like to watch futures, let's see if it takes it out. If it fails to take out 4177.75 tonight, that's a lower high. That's a lower high today compared to yesterday. So I'll leave that up to you guys to interpret what that could mean. All right. So, yeah, here we go. Twice today. I have not seen this in 2023. I have not seen this in 2023, where twice in the same day it negated bearish divergence by curling up. Okay? Twice. That's why I didn't get calls. I'm like, you guys, For you guys who have traded with me in all of 2023, that's the first thing I tell you guys. Like, you guys, we have bearish divergence. You might want to get out. If you choose to stay in, you are taking a risk of it curling down and staying down, not curling back up, right? Combine that with what I said a moment ago also. The 65-minute, as I've shown you, can and has gotten stuffed at the zero line after a 3-hour up move. And that's when you get dumped. So that's what I'm saying. So it depends on your risk level. But you cannot ignore these red flags that I'm pointing out. Depends on your risk level, though. If you don't care, that's fine. No problem. But I do. Okay? That's why I call these things out. So, here's the first bearish divergence negated number 1 was here. Yeah. So, okay. See that? It's going lower, 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 curling down. Oh, it's still bearish divergence, bearish divergence, bearish divergence. But then it curled up and made a higher high right there. That's number 1. Okay, see that? Got it? This is number 2. Down, 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 down. Starting to curl up, up, up. Negated. So 2 times it went under the green signal line. And the first time it actually started to curl down until the market maker, until the plunge protection team came in and said, oh, no, you're not. You're going back up. Okay? You see that? It actually started to curl down, and actually it started to lose the SMA 20. But the plunge protection team, the squeeze control team, came in and said, we're going up. Okay? But as I showed you in that previous slide a moment ago, when the 65-minute MACD got stuffed at the zero line, no plunge protection team that day. You'd gotten stuffed, and then you would have went down. Okay? So that's what I mean. You are, in my opinion, you're just taking a risk. If you just think, oh, it'll curl up twice. I have not seen it happen in all of 2023. So if you wrote it out today, if you wrote out both bearish divergence that were both negated because they curled up, then you took a risk that has not occurred yet this year. Okay? So keep that in mind. Because you don't know if it will curl up. You don't know that for a fact. Especially when, at this point in time, when was this? Oh, yeah. I'd have to check when the MACD was still below the zero line. I don't remember the time. Okay. So, okay, yeah, bearish divergence negated. 0.34 versus 0.35. It's going higher. This is the second time. Yeah, this is the second time. This is the first time. This is the second time. Okay, but since we're going back in time, right? We're going backwards in time, starting with the end first. So right there. So when the bearish divergence is negated, you're going higher. So yeah, here we go. Yeah, it was here, 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 here. Wick. This is a wick up, but before it's a wick up, it's a big candle down. See, it's candle down coming, touching the SMA 20, but then plunge protection says, nope, you're going back up. Okay, so there you have it. Okay, so earlier, actually, I was scaling into puts, but I stopped scaling into puts after that second bearish divergence was negated. So this is Yeah, I was scaling into puts. Yeah, right here. See, this down move is equivalent to this. So I scaled into puts just before it curled back up. Now keep in mind relative to where we are in time. We already had one bearish divergence negated earlier. This is bearish negated number 2. And since I knew this had not happened in all of 2023 yet, I'm like, you know what? I'm going to scale into some puts right here. Okay. So, okay. So that was that. I held on to those puts, by the way. I didn't get out of them because I'm like, nah, something's going on here. So something's going on here. So I'm looking over my shoulder as I'm speaking right now, still in that same horizontal position. Futures is. It hasn't tried to make a move. Has not tried to make a move. Up to 41.77.75. Wonder why. What are you doing? Are you just hanging out there stalling? Okay. Okay. Yeah. Here we go. Bearish divergence still valid. Still no positive cross on the MACD. That would have been right here. Oh yeah, right here. Right here. Of course, here's when the plunge protection team came in and said, boop, go up. Only to come back down. Boop, go up again. So, there you have it. See, that's what I'm saying. I'm looking for that positive cross. Still no positive cross. But then all of a sudden, big green candle went up. The only way this can continue to make a big move. Oh, okay. This is the first down move here now. Right here. Here's the first down move. Because that's going up. See, that's going up. That's going down. So it's like, you guys, ever since mid-morning, there's divergences forming. I'm like, I'm not. You know, usually you don't get divergences forming until like the end of the day. They were showing divergences at the beginning of the day. Okay, so yeah, that. So if you made out fine today, well, that's good for you. But I'm here to tell you, next time you want to walk the line like this and see all these bearish divergences, and you don't have confirmation of the 65-minute MACD actually crossing the 0 line yet, you're walking the line. Because I could tell you next time you're going to get burned. Because I already showed you examples where it happened. Like, boom, you got stuffed. Oops. See? So that's the problem. The market makers aren't always, oh, this time it worked, and next time it's going to work. They just totally randomize it. But I stick to my criteria 100% of the time. I'm like, no, I'm not going to do it till I get confirmation. Okay? So, there you have it. Let's see. This is the only way you can make a big move. Yeah, MACD to curl up. The only way to negate this down move, the MACD must curl up. And it did. It curled up. Curled up. Curled up. See what I mean? That's it. But otherwise, I'm not going to get in on this. I'm not going to hold on. If I had scalped it like right here, and I got up and I saw this big up move. There's no divergence right here. But now as I'm watching this, I start seeing the MACD going down and then cross below the signal line. Oh no. Oh no. I'm not gonna mess around with that. I don't hang around for chop anyways, in general. Okay, guys, that's it. Please feel free to follow me on Twitter, where I give real-time tweets intraday. Don't forget to listen to your favorite music as you are trading. And you can listen to your favorite music even when you're not trading. And helps you get into the right flow stage. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 signing off.